What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Disney stock, ticker symbol DIS, on a variety of time frames in anticipation of the next trading day, Wednesday, May 8th. Alright guys, Disney here today, down $11.08 per share. That's minus 9.51%. Of course, including the earnings move as of the close. Now, listen, after hours movement, it's bound to be lower volume, so whatever after hours ends up being, take it with a grain of salt, okay? But earnings here this morning on Disney. So a few things going on here. As you guys know, I say all the time that guidance always trumps earnings, okay? But that aside, we actually beat on earnings. The EPS, the reported EPS was 1.21. The expectation, at least the most heavily distributed expectation that I'm seeing, was 1.1. That may vary depending on your source. And then if we look at revenue, it was a miss. Missed on revenue for the fourth consecutive quarter. The reported was $22.08 billion. The expectation was $22.14 billion. And the most important, I suppose, part of this was they issued guidance. They issued softer third quarter guidance for experiences in particular. Okay, so especially in this market, funds, institutions, buyers, they're very often willing to overlook a miss on EPS or a miss on revenue if guidance is very strong. For example, you'll oftentimes have pretty good earnings reports, but if guidance is weak, the stock tanks. On the flip side, you can have actually pretty ugly earnings, and if the guidance is very strong and compelling, the stock can skyrocket. Okay, I think that's a pretty big misconception people have trying to play earnings, is that it's all dependent on the numbers. It's not really. It's even more the numbers matter, but it's even more dependent on the tone on the earnings call, and especially that guidance, being that the market is a forward-looking entity. So look, I really like when companies report earnings in the morning because it gives us a full day, the same day, with really good data to look at after the fact. So we're going to do that. We're going to take a look at the volume profile. We're going to do an analysis on that to try to pull out any bias that isn't obvious necessarily with the price action, kind of looking under the hood, right? And then we'll take a look at the psychological levels that we need to pay attention to by default because the big money is going to be watching those. And then we'll finish out with both implied volatility, which will affect those of you who especially trade options, and we'll look at expected move and the directional bias for tomorrow coming out of the chain. So let's get started here by doing that volume profile analysis here on the 5-minute chart. Listen, if you are new here, by the way, Disney is today's wildcard stock. The wildcard stock is voted on by you guys in the comments section across the videos every single day. My goal here is 10,000 subscribers, so I appreciate you subscribing to the channel, and I will keep the videos coming daily. Now, looking at the volume here, when they report earnings that early, you'll notice that volume is actually relatively low upon the report. As we come into the open, volume picks up, but there's really no bias there. It's very evenly matched. Okay, off the open, highly contextual, high volume open, quick fade. As we move through here, we see a bit of a pop, all right? And that right there, I think what we need to do is actually compare that to the move. You see we got a little bit of a dip and then recovery into the 9 EMA, but it wasn't quite the intraday low. So that to me, being that it's essentially what ended up being very close to a net neutral move by the end of it, okay, it was slightly net negative. The volume, however, it wasn't different enough. Like, had we seen 3 or 4 high volume red bars, $1.25 million each, and then maybe $500,000 on 3 or 4 green bars, that would be obvious bearish bias. But here, it's a little too it's a little too close for me to feel comfortable assigning any bias there. So I'm not going to. Let's move on. We move on here through the day. This bar here, we get a little bit of a pop. That's a little bit too much of a risk of fooled by randomness being an outlier like that. And that was actually the bar that happened to be the intraday low. Okay, so that's relatively expected. So I'm not going to do anything there either. Moving on, very contextual throughout the afternoon and later afternoon. And then we head into the close. And you can see here, we get that very normal curl up in volume into the close. Now, these two here, guys, if we look at the actual movement, extremely light and a couple of wicks. Now, a few things going on here. First of all, the fact that those two bars contributed to very little movement and had were kind of wicky, right? Well, that tells me that both of these were battle bars. A lot of buys and a lot of sells happening on the same bar, which naturally pumps up volume. Not only that, though, these two bars that straddle the closing bell tend to be very active, algorithmic, rebalancing bars. That makes sense, right? A lot of buys and sells happening right before and immediately after the close. What do? You get high volume with very little actual movement. They just happen to be a little bit red, hence the color. So I know that looks scary. I'm not worried about that at all. Now, some of you might be looking at this and you're like, well, okay, so we just kind of went through everything and there really wasn't much bias at all. What does that mean? That's actually very important information. I mean, the stock's down 9.5% today. If I'm positioned short on Disney, I'm looking at this volume profile and I'm a little bit annoyed, right? Because I would really want to see massive bearish bias anywhere I can get it. And going through this, just unbiased, I'm struggling to find any bias to either direction. And if you're bullish on Disney right now, I mean, the stock's already down 9.5%. There's no getting around that. It's down, okay? But if we look under the hood, the last thing you would want to see is a volume profile that just heavily supports that move. Really what you would want to see is a volume profile like we're kind of seeing that doesn't really show much bias at all. Okay, at least we can look at that and say, okay, well, that doesn't really support today's move as much as I thought it might. So important to understand what's going on here. It's very telling, gives us a lot of information we wouldn't have simply by looking at the price action. Now let's move on. Let's take a look at the psychological levels because a lot has changed here today. We gave up on the 30-minute. We'll look at the 30-minute, the 4-hour, and the daily, like the most popular time frames, right? That self-fulfilling prophecy mentality. We gave up, starting on the 30-minute, the 50 period and the 200 period here this morning off of earnings, whereas previously we were riding above both of them, which was a good scenario. Now, a couple of things here. We currently sit about 6.4% to the upside away from both of those levels. Bulls, let's just be real. The goal here is to reclaim at least the 50 period, which is likely to come lower, obviously faster than the 200 period, as soon as possible. Reclaim at least the 50 as support. The ultimate goal is to reclaim both and end up in a scenario like this, where you have the 50 pulling away from the 200 and you're riding above both, treating the 50 as support. That's a great scenario to be in. And in order to return to that, we're going to have to start just by reclaiming at least the 50. All right, bears, your goal here tomorrow is to get this 50 period to rip downside as hard as possible, get a psychological area of potential resistance as close to the stock price as possible, retest it if we can, and then reject hard on high volume. That's kind of the look here on the 30-minute. Now let's move on to the 4-hour chart. You can see here, I'm not going to spend a ton of time here because we currently find ourselves after breaking downside beneath both the 50 period and the 200 period on the 4-hour chart. We're now, again, about 6.6% away from that nearest level, which is the 50 period. Similar scenario here, bulls. The goal eventually is to at least reclaim the 50 period and get kind of back in a scenario like we were heading into earnings. Bears, understand it's going to take time for this 50 period to come downside. It's a slower moving chart, right? A slower moving average, right? On a longer time frame chart. So these move less quickly. It's going to take some time, but bears, you would like to see that come downside as quickly as possible, claiming as many new whole numbers to the downside as possible. Whereas bulls, ideally that 50 period taking as long as possible is good, right? Because that leaves some room that a lot of bulls can look at and say, you know, there's really not a lot of psychological resistance, especially on that 4-hour chart. And that's just another tick on the box, right? I'm always looking at these charts as kind of separate entities. And when they all line up, that's like the best case scenario. But we rarely get that best case scenario. So we just want the look to look as good as possible across all charts when you consider all of them. Now, the most important chart of all is the daily. Okay. Oh man, this is, for the very short term, a little heartbreaking. We had just heading into earnings. We had just reclaimed that 50-day moving average. Guys, Disney is a heavily watched stock. The daily chart is a heavily watched time frame, and the 50-day moving average is probably the one of, if not the most watched indicators on this stock, aside from maybe like volume. Okay, this has a lot of eyeballs, and we were struggling to reclaim the 50-day. We had just done so, holding it as support, and then gave it up here today. We're now finding ourselves about halfway in between the 200-day and the 50-day. All right. The look now on Disney is a couple of things. Tomorrow's the battle of 105. $5 increments are big psychological levels on Disney, and the biggest psychological level is $100 a share. Okay. Really what I'm looking at here is tomorrow as the battle of 105, and bulls, if we can use 105 as a support level, we can use it as a kind of a near-term trampoline to start making our way back up toward 110, which is that next level. And you can see it's also a technical level. It was acting as support here just recently. And bears, we can get below 105 and treat 105 as a resistance. That can set you guys up for your ultimate goal, which is really to kind of use 105 as a ceiling to help push us down for a test of 100, which if you're a bear, I bet you're looking at $100 a share and kind of salivating over getting beneath that, making this a 2-digit stock again. All right. That's what I'm looking at. Battle of 105 with 100 as the downside of this big channel and 110 as the upside of this big channel. And it's very neutral right now as far as that look is concerned. But tomorrow, primary concern, hold your side of 105. Now, implied volatility, you can see very common. Tanked off today after earnings, right? Because implied volatility is literally the expected volatility being priced into the options by the traders. All right, so when you're coming into a volatility catalyst, that tends to elevate. And then after the catalyst is over, the traders no longer have reason to expect outsized volatility because there's no longer a catalyst, right? So that plummets. And that sucks Vega value out of options contracts. So if you purchased contracts, you know, I called IV crush. If you're experiencing IV crush today, there's your culprit. Now, the lower IV goes in comparison to your intended trade time frame, the more favorable conditions become to purchase new contracts. So consider that as well. Now, we're going to have new expected move data priced in today because, again, that's the benefit of having options reported in the morning. Or I'm sorry, not options. That's the benefit of having earnings reported in the earnings, right? So the next expiration we have on Disney is Friday, May 10th. All right. The expected move by Friday's close compared to today's close is plus or minus $2.45 a share. So what we can do, because we don't have daily expiration, so we do a little bit of math, a little bit of guesswork, and we take plus or minus $2.45 per share. We divide it by the 3 remaining trading days, and then what we do, because that assumes 3 red days, 3 green days, right? We add back what I'm doing in this market is adding back 50%. That gives us a plus or minus expected move by tomorrow's close of $1.22 per share, approximately. Okay, that's with a little bit of guesswork, but you know, that's what trading is. Whoever can do the best, most accurate guesswork consistently wins and makes the most money. Now, by design, that does not have directional bias mixed in. So you're like, well, what the heck, right? Directional bias. Well, we can look at the volume. I've been tracking this for years. Okay. If you're on Disney today, this is literally the volume just from today on Disney. We had 678,000 contracts traded, 474,000 calls, and 205,000 puts. So we're getting a heavy call side bias, bullish bias out of the overall call per ratio today. But if we break it down, look at, oh my goodness. Look at this. If we break this down by time frame, the 0 to 20 delta range, the short-term speculators, kind of those short-term gambly style calls and puts, 273,000 calls, 55,000 puts. An extremely heavy call side bias today out of the short-term speculators, which is interesting. Listen, guys, if you got value out of that video, I ask you to do one thing. It's 100% free, takes half a second. Leave a like on the video and then get out of here and enjoy your day. I appreciate it, and I'll see you in the next one.